Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
So we had kind of a busy Monday. Kind of. Nothing really happening domestically other than the big news about former Federal Reserve Chair Alan Greenspan passing away at the age of 100. We're going to talk about that. That's not really going to impact markets, though. And we did see rates were up. No doubt about that. A lot of it with what is happening internationally. U.S. and Iran, Israel, Lebanon, and then, of course, the chaos that is the United Kingdom. Oh, man. Starmer's out. So we'll talk about that as well. But welcome, everyone, to the Tuesday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Cralle, of course, loan officer at Town Bank Mortgage, right here in Wilmington, North Carolina, where we break down the top stories impacting mortgage rates every single weekday, unless, of course, I am sick, on vacation, or it is Azalea Festival week. And it's neither of those. So let's talk about the latest with the Iran negotiations. Because it seems like, to me, this is what, I mean, I'm sure the UK was involved a little bit with the continued unrest there. But we've known that Starmer was kind of on his last leg for a couple of weeks now, so it wasn't completely shocking. Meanwhile, the U.S.-Iran negotiations continue to be somewhat chaotic in that just trying to figure out where everyone is, because you're hearing various things from both sides. But a big announcement was made on Monday. Vice President J.D. Vance at the Swiss press conference noted that the U.S. temporarily was going to remove sanctions that banned Iran from being able to sell their oil in dollars. According to the Wall Street Journal, this came from an announcement from the Treasury Department, which waived a long-standing sanction on those sales, those oil sales, for 2 months, while talks to formalize the reopening of the Strait of Hormuz and address the issue of Iran's nuclear program and further sanctions relief proceed. Vice President J.D. Vance said Iranian officials have agreed to allow nuclear inspectors back into the country as early as this week. The moves signaled progress in the continuing negotiations to wind down the war, but they could also rekindle concerns that Iran is getting meaningful financial relief before surrendering parts of its nuclear program. And there was an argument that was being made by J.D. Vance as he went on a sort of press tour selling this deal, was that Iran wouldn't get any benefits until they showed, progress. And it looks like they're immediately getting financial benefits. We're not giving them money. We're not unfreezing assets, but in a way we are, in that we're allowing them to sell their oil, which is their number one export by far. And otherwise, that was one of the arguments about the war, was that if we stop them from being able to sell their oil or make it extremely difficult, they're going to get to a place where they have to shut down their oil production. And that's not easy. That's not like you just turn something on and turn it back on again. That would have been devastating in itself. And so I don't believe they ever got there. And so allowing them to sell their oil and then giving them the added benefit of being able to use the U.S. dollar is a big benefit to them. They're gonna make lots of money on this, where they would not have been able to before. And so, like I said, maybe them coming to the negotiating table is a sign of progress, but it does seem like that may have been a contradiction to what was argued about what was in the agreement. And by the way, just in case you're running the timeline, I had to go look this up. Early 2010s is when they pretty much blocked Iran from being able to use the U.S. dollar in transactions and forcing all the other countries to kind of get on board. Slight relief after the JCPOA was signed in 2015. Not full, but slight relief. And then once again, when the JCPOA was tossed out, then the ban once again in effect. So pretty much for like a decade and a half, Iran has not been able to trade oil in U.S. dollars, which they've created kind of the shadow network to be able to get around that. But they'll definitely make more money being able to do that. So we're, I guess attracting more flies with honey by being nice and giving them almost an immediate benefit. But you have to wonder if that could backfire to some extent. And we just keep these 60-day sanctions relief going forward. We're never actually making any progress. One of the problems you might run into by giving them that sort of that benefit, because then you can't really take it away without the negotiations falling apart. So we'll see what happens. I do think, though, that playing a part in what's happening with markets. And so we are seeing some relief. So, Brent is below $78 and what I'm looking at right now. So we're still under 80. But, if you look at the chart and you look at, say, 5-year chart, we're kind of in line with where we've been. But we're still well above where we were before Ukraine and Russia went to war. So, it's like it's better, but it's not great. And so you could still have inflation pressures, which is why I think you're seeing rates higher, as it looks like a longer deal may not exactly happen right away, if at all. Because once again, Iran closed the strait over the weekend. The whole purpose of them signing the MOU was they're going to open the strait, and then they closed it again. So it's like, I don't know what we're getting out of it. We're giving Iran sanctions relief, and what are we getting? And so I think that's sort of an imbalance when it comes to negotiations is going to be a problem. So I think that's why markets are reacting that way, no doubt. And then, of course, on top of that, we have the announcement from the UK that Starmer is gone. And so now his announcement has cleared the way for Andy Burnham, who is a left-wing former mayor and will likely become the country's 6th prime minister in 7 years. Speaking outside of Downing Street, Keir Starmer said he would quit as Labour leader but stay on as prime minister to ensure an orderly transition to his successor, a process that could be completed by mid-July. British politics has become increasingly unstable in the past decade, starting with the 2016 vote for Brexit that showed new fault lines over issues like globalization and immigration that started to crack the traditional Labour conservative domination for the past century. A succession of shocks, Brexit, pandemic, the war in Ukraine, the weak economic growth in the UK and Europe in general, and a surge in immigration has left many voters disenchanted. This is not Burnham's first attempt. He tried and failed twice to become Labour leader in 2010 and 2015. He was until recently the mayor of Greater Manchester in the UK's second most populous metro region with a budget of around £3 billion. Investors are closely watching to see what this means. A lot of people are concerned with a more left-leaning official that this could mean more spending at a time when budgets are already strapped. Pretty much everywhere, but the UK as well. And so, that's not going to be a good thing for interest rates in the UK if we see government spending rise. Berman, not surprisingly, like most leaders, may have used more radical rhetoric for example, at one point saying, talking up the idea of, quote, a business-friendly socialism. However, the Journal notes that in the past few weeks, he has tilted towards the center, pledging to abide by current government fiscal rules, and said he would stick with the government's approach to cutting immigration levels. Now, what's funny is they talk about Starmer and how, what was funny was that he had the second largest parliamentary majority since World War II, but then within weeks, missteps began, including disclosures that a donor had provided him and his wife with free clothing and a decision to suddenly axe a winter fuel benefit plan for pensioners. He then passed some of Britain's biggest tax hikes in the post-war era, despite pledging not to do so, and increased the minimum wage, which has crippled business activity. And so now you got to, so it's kind of funny immigration's obviously a big issue that's being led by a lot of people on the right, but, raising taxes, increasing the minimum wage. These are things the left should like. So it's funny how quickly he lost support, and he's not alone. 6th prime minister in 7 years. Like I said, that's not good. Anytime you have chaos politically, especially in a developed nation, it's no doubt weighing on markets. So I think that's playing a part as well. So because of that, we did see, the 10-year was up about, I think it was 6 basis points. Just around 6 basis points. 10 years now above 4.5%, first time in almost 2 weeks. I think June 10th was the last time we were there. And then Mortgage News Daily had the 30-year up to a very evil 6.66%. I feel like they should do that. You know how hotels don't have a 13th floor, even though we all know it's still a 13th floor. They don't. I think we should just not use 6.66%. It pops up a lot. I don't like it. It's a bad number. But yeah, that 6.66%, that is the highest number since, the 10th of June. So, we've seen rates jump up since last week after the Warsh meeting. They've been slowly working their way back up. So, not the best, but not because of anything really happening domestically. It's all international. All the international stuff is causing this. All right, let's talk real quick here. Alan Greenspan deserves more, but this is a short show. So Alan Greenspan passes away, age 100. He was the first, I'm trying to think. He was appointed, he was my first Fed chair. So he was appointed by Reagan. Am I right about that? It was Bush. I think it was Bush, right? And so it's in one of these articles. But basically became kind of this rock star, which is kind of funny when you look at him because he doesn't seem like he'd be a rock star. But yeah, really kind of changed the Fed's look and communications and everything that happened. I know he was, I don't know if he coined the term Fed speak, or if that happened during, or if someone else coined it. It happened during his tenure, and sort of the ways that he would talk and the opaqueness in his statements sometimes on purpose. Like I said, I was way too young because, he left, obviously, in George W. Bush's term. So it's 4 presidents. So, yeah, that would be Reagan, Bush, Clinton, Bush. Yeah. Okay. All right. So, yes, he was appointed under Reagan after Volcker, following Volcker. What's funny is I was reading about him. I didn't realize one of his mentors was Arthur Burns, who many people would note is maybe the worst Fed chair ever. And got bullied by Nixon into lowering rates and causing inflation to skyrocket. And Greenspan is looked at by many as being one of the best. A lot of people claim that his reputation was hurt, that after he left, not long after, we had the housing crisis, and some people say, oh, that's he's partly to blame for allowing markets to be unregulated and blah, blah, blah. I don't buy into that, but yeah, I mean, there's a lot of articles out there. I'll have them on the website. I'll put them in the show notes too. Journal had a great piece about him. Greg Ip, who writes over at the Journal, had a great piece about him. Oh, Nick Timrose is the one that wrote the piece of the Journal. So that would make sense. And then there was a great piece by Carl Smith over at the Dispatch, in which Carl Smith argued that back in the early 90s, when, we were in this sort of recession after the Gulf War, and, you had, because people forget there was a recession at that time. It's one of the reasons why George H.W. Bush lost the election and Clinton won. And there were, talks that the Fed, should be doing more. I think Bush even at one point claimed that him not raising rates or lowering rates actually ended up hurting him. But there was a time after when they sort of came out of this recession and people thought that he should be raising rates because there was a fear that the economy was going to overheat. And Greenspan famously looked at the data, and there's a great quote in here that he said. I want to get it. Bob Solow, is it Solow? Bob Solow, who said, "You can see the computer age everywhere, but in the productivity statistics." Greenspan quoted this often, and he was pointing out that the computers were becoming a huge part of our economy, but there wasn't any evidence that they were providing any real, productivity boost, which would make sense that they would be, because it was making jobs so much easier, especially with the internet. And so Greenspan correctly assumed that we were going to see a productivity boom that was actually going to be deflationary. And so if he had raised rates at that moment, you would have had a deflation problem, which I know people always think is a good thing because inflation means prices are rising. Deflation means prices are falling. Deflation is the worst thing that can happen to an economy because it shuts it down. Because if prices are falling, why would you buy something now if you can wait a week and it'll be cheaper? And so what happens is people stop spending money. Consumption stops happening, and our economy is entirely based on consumption. And so it's catastrophe. And so we would have had two deflationary events happening at the exact same time. And it sounds like it would have been a great thing. But the economy would have come to a halt. And so what he did was actually not just keep rates. He actually at one point even lowered rates. And everyone was like, oh no, he's going to cause the inflation to take off. And the heating that the rates were causing was countered by the productivity gains. And that's what led to the longest economic growth in U.S. history between 91 and 2001. And so the reason I bring that up is that Carl Smith mentioned that Warsh is sort of making that argument right now with AI, and that we are on the cusp of a huge productivity gain. And so that's why you could make an argument for there possibly being lower rates, assuming there's no oil shocks and other shocks that could counter that and make that somewhat problematic. So I just wanted to bring that up because I thought that was kind of an interesting parallel between what Greenspan saw in the early 90s, and then here we are in the mid 2020s, and there could be similarities there. Well, history is a circle. Everything always cuts back around. All right, we got to go. You guys enjoy your Tuesday. We'll be back here Wednesday. It's going to be a boring Tuesday too. There's nothing really going on. Thursday's the day. There's like 5 reports coming out. Nothing going on. So we'll see what we'll talk about tomorrow. But you guys enjoy your Tuesday. We'll be back here Wednesday for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. You buy real estate and wait.